What are some of the equities you like right now?
Well, I mentioned Microsoft, which I've owned for a long time, but that's not terribly controversial. The most recent stock I bought was DeVry, which is the for-profit education company. So that's a pretty good example of I know, exactly, exactly. But that's a pretty good example of looking at out-of-favor things. The stock is down from 60 to 24. But I got interested in it because I saw some insider buying, which hasn't happened in a long time. And they announced a very large share repurchase program. Now, the company's always had strengths in that it is the class act in this industry. It has broad diversification. It's got a lot of students around the country and in other countries. And I think about 30% or close to 30% of their business now is outside of the United States. And Brazil is a real growth area for them. So, and notwithstanding the current government in particular, but notwithstanding the government's distaste for-profit schools, they serve a real niche. And they also tend to be cyclical, so they tend to do better when the economy starts to do better. So there's a lot of reasons to think that this company could get back on track, and it generates very high returns even in bad times, and it has very good margins, and it has, compared to the competition, better repayment on the part of their students of the Pell Grants and student loans or things. So it's going to be a survivor even if they take out the rest of the industry. And I'm encouraged by the fact that management seems to think so too, so through the insider buying. So that's the stock that we bought recently. And I think that's an interesting kind of name. Give you another one, larger name, Procter Gamble. I was thrilled to see a short recommendation on it today. So I know I'm on the right track.
But even though raters are starting to sniff at it?
Well, that's true. And rater, I mean, I would be very reluctant to short a stock where there's a rater in there. But, Procter & Gamble has lagged for a long time. And not only in the stock market, but to be fair, its business has lagged. They've had some problems. Management has gotten, I think, our point of view is that management has gotten the message. They tried to deal with this issue by cutting prices, which is generally not a good idea. And I think they're back on track, and they have an aggressive program to reassert their strengths in markets all across the world. I mean, you don't. Somebody our age, we know Procter. We grew up with Procter and Gamble, but they do have very, very strong brands. Now, part of the argument against Procter and Gamble has been that the middle class has been squeezed, and that the middle class is the ones who buy Procter and Gamble products. Well, I think that's probably some truth to that. But I also think the middle class is growing elsewhere all over the world, and they're going to use Procter & Gamble products as well. So I think and it's cheap enough relative to the peer group anyway. It's not as cheap as some of the names we talked about. But relative to its peer group, it's selling at the biggest discount it has in years. So I don't mind owning a high-quality name like that. It's got a place in the portfolio.
What other ones? Natural gas still attract you?
Well, I'm very interested in natural gas, and we're thinking of a way to create a natural gas fund.
A company like Carbo's taken a real
Well, it has, and in part for two reasons. One is that as the gas prices got lower and people switched from, or companies switched from drilling for gas to drilling for liquids, Carbo wasn't logistically positioned to be able to participate in that. That was one problem. And then the other problem is that sand is just much cheaper than the ceramics. And if you can get almost the same amount of work done using sand as a fracking material as the ceramics, it cheapens the cost of the weld. So, and that was very important when the price of gas started to come down. So, we no longer own Carbo, but we have it. We look at it. But my general feeling is, and this is no longer new, but that the natural gas gives us a new lease on life in this country. I mean, I think that's so. How do you play natural gas? You might be playing. Maybe I bought M&T Bank as an example. It's done. That's the second stock that it's like a bank.
Financial.
A financial, but it's not a money center bank. It's it's located in Buffalo and in Maryland. But M&T Bank is in a great position to capitalize on the Marcellus Shale, because if the Marcellus Shale gets developed, it'll get developed in those areas where M&T Bank has a strong presence, and the businesses and the communities and the economies in that locally will do better. and they will do better as a bank as a result of that. So how do you play this natural gas thing? I think it's really big, and so we're working our way through a way to take advantage of the notion that maybe the era of expensive energy that started in the early 1970s and lasted through 2009 or so, maybe that era has come to a close, and that in this country, all of a sudden, energy might be cheap again. That may be more important than all of the damage that governments have done to the economies in the United States and elsewhere. So I'm very keen on that, but I haven't really been able to, except for esoteric things like that, I haven't really been able to come up with a overarching theme to make money on it.
Company like Ford, you still like?
I do like Ford. I mean, it's a cycle. You buy a stock like Ford to sell it, but I did think that that buying it when we did, more or less, not quite at the bottom, but more or less during very tough economic times, and over time, as the economy does better, Ford should do better. It didn't have to take the money from the government. They are making good quality cars. I think on a dollar for dollar basis, American cars are pretty attractive relative to the competition, and I think Ford has done a lot of the right thing. We like the management, and it's cheap, so why not own it?
What are there any other ones that
Jump.
get you excited?
Well, I'm getting along the same lines. I'm getting sort of reinterested in Intel again, because the stock has come down
Right.
a little bit, and it has many of the same strengths as Microsoft has. It sells at relatively low multiples and pays a pretty nice dividend now, and is in a particularly good position. So that's one that we own. We do tend to own a fair number of technology names still, because those have the best characteristics in terms of the metrics that we look at.
Like Cisco? Or?
I do own Cisco, and we bought that when it stumbled. We've owned it for a long time, but we added to it recently, about 6 months ago, and it stumbled, and then 3 months ago it reported some pretty good returns, and so we trimmed a little bit when it got close to 20 or just above 20. But I think that's probably a $25 stock, and I don't mind holding that. So that's 50% up from here. So I don't mind holding that. One of the names that we've owned for a very, very long time is Murphy Oil. And Murphy Oil has been a disappointment relative to the other oil companies. It's always been cheap. But I think that there's now some external pressure on Murphy Oil. Somebody has filed on it, and I think that they may well be forced to take some actions to close the gap between the price of the stock and the underlying asset value, which we think is about $90 a share. Stock trades at the mid-50s. That's a whopping discount. And I think what's really interesting about Murphy, and they're very nice people, but they've built some decent businesses, but their problem, I think, is that the industry has outgrown them. And whereas they were always a mid-size company that was kind of an elephant hunter in the E&P business, they've gone from a mid-size to sort of a very small mid-size, because the rest of the industry is. And so I'm not sure that they're in the position to compete on the E&P side that they once were. I just don't think they have the wherewithal. And so they have to make some decisions as to how to proceed, and also how to realize on the values that they've created. And maybe the outside pressure will be good.
You're looking at AIG again after?
We have looked at it. We've looked at it a couple of times, and we probably have missed it. But the general feeling that we came up with is that the things that made that company, the divisions that made that company inherently most interesting and strong, are some of the divisions that they sold. So it's not the same company that. Now it may be cheap, and it may be out of favor, and it may be undervalued, but it doesn't have the horses that it once had. So we haven't permanently precluded ourselves from buying it, but at the moment we're still on the sidelines.
Robert, thank you.
Well, it's a pleasure to be here. Thanks for having me.